with me, Michael Obodu. Coming up tonight on the show, we delve into the Israel-Iran conflict and its implications for fuel prices at local pumps. Iran's parliament has voted to close the Strait of Hormuz, the vital shipping channel through which around 20% of the world's daily oil flows. The move, which could block $1 billion in oil shipments per day, is likely to send oil prices soaring. How will all of this affect fuel prices? We'll find out. We're live on Facebook and on DSTV on channel 279. But before we delve into our headlines for today, we'll turn our attention now to the currency and the commodities market and bring you updates where the dollar currently will be bought from you at 10 cedis 29 pesos, sold to you at 10 cedis 30 pesos. The pound will be bought from you at 13 cedis 89 pesos, sold to you at 13 cedis 90 pesos. The euro bought from you at 11 cedis 87 pesos and sold to you at 11 cedis 88 pesos. Do note that these figures will be slightly higher at a forex bureau near you. Now, on the commodities front, the price of cocoa is up by $303, trading at $8,472 per ton. Gold also is up by almost $21, trading at $3,389 per ounce. However, crude oil is down by about $2, is trading at $74.97 per barrel. Remember that Business Focus is sponsored by Telecel and EcoBank. We'll go for a quick break. When we come back, we'll bring you more. Stay tuned.
Every day, people have money emergencies. Ma, I need my school fees emergency. Mommy, chop money emergency. Emergency. Catch it. I'm your rent emergency. Now, there's a new emergency number in town. Dial *770# for all your money emergencies and chop life.
Dial *770# for money emergencies and get easy and quick access to your money, loans, and other banking needs. EcoBank, the Pan-African Bank.
Malaria's remedy is Lonat. Therefore, we're gonna use Lonat to recover. You have malaria? Yes, please. Are you shivering? Yes. You got chills? Yes, take Lonat. First day, take Lonat. Second day, take Lonat. Third day, take Lonat. That's all. Lonat scatter malaria. Lonat it scatter malaria.
This advert is FDA approved.
When you're low on energy and need a break, give yourself a treat. Cadbury Hot Chocolate. Smooth. Crafted from cocoa, milk, and sugar. Creamy. Chocolatey. Frothy goodness. Rich taste. So satisfying.
Cadbury goodness. The treats you deserve. Every day. This act is FDA approved.
Everybody knows Acrobato. And if you know Acrobato, it means you know M-Punch homeopathic.
Welcome back. This is Business Focus here on TV3. Just gone by was EcoBank tidbits on why you should diversify your income. And do remember that EcoBank is a proud sponsor of this show as well as Telecel. We'll turn our attention quickly now to the T-bills market and bring you updates on how the Treasury market has fared so far. We see that the 91-day bill has declined by 1 basis point to 14.69%. 182-day bill currently maintained at 15.25%, and the 364-day bill dropped by 5 basis points to 15.69%. And these are the rates that you'd get from the T-bills market should you go there to get some Treasury bills. Medical emergency, you name it. But of course, you can, but many Ghanaians don't know their emergency numbers. Well, here's one you would want to remember: *770#. Yes, *770# is the new EcoBank money emergency number. *770# gives you instant access to loans, fund transfers, utility payments, airtime, data purchases, and so much more, even without data. So there's no need to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial *770# now for solutions to your money emergencies. EcoBank, the Pan-African Bank, and proud sponsors of Business Focus here on TV3. Now, to our topic for today, we'll be walking you through a number of slides on how this whole conversation on the Israel and Hamas conversation basically is going to look like. But just before that, we're walking you through what you can see on your screen there is how global crude prices have fared so far in June. This month, you see that it started on a low of about $65 per barrel. But as we speak at the moment, it has risen sharply to over 77. And at some point over the weekend, actually, after the attack by the U.S., there are reports that it had spiked to over $80 per barrel. However, things are settling in. But the question really is, how far will this conflict go? Because already we are hearing that Iran has embarked on a retaliation attack on a base in Qatar. We'll bring you updates on that in our subsequent bulletins, but it just tells you the level at which this conflict is actually going. Is it going to die off soon? What will be the economic consequences if it continues to drag, especially when Iran has already begun making steps to close down the Strait of Hormuz, where its parliament already has voted for that particular strait to be shut down. Now, this is also, we'll walk you now to how petrol and diesel have fared at the pumps locally. As at January, was selling at 14 cedis, 99 pesos, but we've seen some 7 consecutive drop in prices at the pumps. And for the first time in a long while, fuel prices were sold for about 11 cedis, 77 pesos at the pump. Some OMCs are even selling lower than 11 cedis, some as low as 10 cedis, 50 pesos from Star Oil, Allied, Puma, and the likes. The names are quite a number. And it shows you how competitive the market has become now with the price declines that we are experiencing. However, with what's happening on the global front, analysts are already projecting that we should expect some price hikes in the subsequent window. Some are projecting as high as 10%. Will that come through? Will the increase be marginal? We'll be dissecting the issues for you on the show today. Now, the Strait of Hormuz, why is it critical in this whole conversation? Well, the fact is that where it is positioned makes it very central in the Middle East area because it lies between the north of Oman and then also the United Arab Emirates to the south, linking the Gulf to the Arabian Sea. Now, understand that about 20% of total global crude passes through that strait. So that's a very crucial one. So if that strait is blocked, it means that 20% of global supply will be impeded. Now, and every day, about $1 billion worth of crude passes through that strait. So it will have significant economic consequences if the strait is actually blocked. How important is this strait also to Iran? From the data that we have right now, as at first quarter of 2025, about 1.5 billion barrels of oil passes through there from Iran. And you can see that Iran is also a key user of that strait. The more reason why the question is, will they shoot themselves in the foot by closing it and also restricting supply? Or are they willing to bear the brunt and go all out just to make a statement with this particular war. We'll see how things pan out in the next couple of days. Now, the impact of the closure of this strait, how is this going to affect the market? For instance, when Iran impedes the market in Asia, particularly China, which accounts for a majority of Iranian oil exports, the country will not be able to export its own products. So by closing that strait, Iran itself will face some economic impact. Are they willing to take the risk for the greater cause of the war they are fighting? We'll see how all of that passes. And now look at this quote. It says, if Iran blocks the straits, the country risks turning its neighboring oil-producing countries into enemies and risk hostilities with them. That's according to Vandana Hari, founder of Vanda Insights. My guests are seated. We'll be dissecting the conversation for you to see what are the odds and really how does all of this play out for us as a country that relies heavily on crude imports, on finished product imports, and a country that doesn't have a working national refinery yet, even though we do know that Central is working on stream. So those are the nitty-gritty we'll be looking at today. And how does this impact us as a country, especially on the energy security side? And what should be the way going forward for us as a country? Well, I have seated in studio with me Dr. Patrick Ofori. He's the CEO of the Chamber of Bulk Oil Distributors, Ghana. Thank you, Doc, for your time.
Thank you for having
Also in studio with us is Dr. Yusuf Sulemana. He's an energy analyst and he has a new title. I'll let him announce it to us. Congratulations on your allergy. Do you call it attainment?
Of course, yes, sure.
Okay, so you are now allergy. Okay, so Dr. Allergy Dr. Yusuf Sulemana. And we know that you used to be at TOAS, the MD. You've been reassigned. Where are you now?
Yeah, at the ministry
Okay.
as technical advisor and technical lead for this gas processing plant too. We have a committee that was set up to chart the strategy of implementing it. I am the technical lead for that committee. Yeah.
Interesting. You sound excited about it.
Sure.
I'm sure that we'll make time to delve into that conversation. But I'll start with you, Doc. I know you have worked in Oman, lived in the area, and Oman is just a few kilometers away from the Strait of Hormuz, I understand.
Sure.
Really, how crucial is that strait from a personal perspective?
Yeah, so looking at the geography of the area, I think it's very crucial. Not only to the Gulf or to Oman, but to the entirety of the global energy space or the global energy community. Like rightly mentioned in some of your snippets, if you notice the Strait of Hormuz, it controls about a fifth of global oil supply, and that translates to about 20 million barrels of oil per stream day. Just imagine even knocking out 1 million barrels of oil per stream day from the global basket. That will have huge ramifications. Yeah, so that's one. So that is the fundamental difference between this particular conflict and that of what we have in Russia, Ukraine. You see, the market easily fizzled off Russia, Ukraine. Yes, Russia was a force to reckon with. But that of Iran, the fundamental thing is the key ingredient within the equation that is making it more complicated is the Strait of Hormuz. And the reason being that if you look at the entirety of the Gulf, when I say Gulf, the GCC, we have 6 of them. They are what we call the Gulf states, the non-Persian Gulf states. So we have Oman, Qatar, UAE, Saudi Arabia, Kuwait, and Bahrain. Then we also have Iraq, also part. Iraq is not GCC, but it's also part of the Gulf states. These are huge oil producers. Now, they are at one side. Then we have, Iran on the other side. So this Strait of Hormuz is sandwiched between Iran and that of Oman and UAE. And it's a choke point. That is just at the entrance about 55 kilometers. But the middle portion of it is about 33 kilometers. All right. And in a day, it is estimated that about 90 ships passes through this.
Wow.
And it controls like 50 billion on daily basis. So on annual basis, let's say equivalent of hydrocarbon product, about 600 billion. So that is just huge for the global community to be able to contain. So, and now when we come to the Gulf, if you look at, people ask, we are in Africa, how are we going to be affected? Yes, we are there. We are not importing oil directly from the Gulf per se, but where we are importing from, they also get their supplies from Gulf. And if you look at these countries that I talked about, the aggregate of their production is about 30 million plus. And 90% of that also passes through the Strait of Hormuz. So you can just imagine if, let's say, that 90 is knocked out. That 90 may not be knocked out, but there may be a kind of a disruption in flow, and it happens in the 80s during Iraq and Iran war, and that was catastrophic. You know, players came for cool heads to prevail. That is my take. I mean, that is my prediction, hoping that, because if you look at nobody's insulated. Even those who are world-class economists, nobody will be insulated, because at the end of the day, what's the single variable? Oil prices. And nobody's insulated from global oil prices. And analysts or pundits are estimating that it could even triple oil price decades. We don't want to go there. We are hoping that, I mean, the actors who stimulate this particular conflict, they will reason up and cool heads will prevail. And if that happens, I believe we may not have it going that side. But what we saw, the 10% jump, the 9 to 10% jump, is what we call speculative jump. That is not within the fundamentals. That is not supply demand, but that's normal for the market.
Which we are beginning to see recently.
Yes, yes. So if you notice, after the strike, it went 10%. And it's still staying there, 77, 76, because the premium is still there. It's not that supply has disrupted. It's not that demand has reduced, but that premium is still keeping it there. So the take is that if, let's say, give or take, this conflict, stagnates and perpetuate in this kind of conundrum, what will happen? That will likely have it that way, and until the market fizzle off that premium. But the chances of miscalculation is very, very high. So that's why everybody is sitting on the edge or on tenterhooks. Yeah. Because at the end of the day, if push gets to shove and Iran take the risk of actually disrupting or blocking it, and they are capable, it's within their nautical miles. If you look at the distance from where the Iran controls it, they have override control over it. Of course, we have other huge players, US and other players. They have huge bases there because of the critical nature of it. So we live to see. But the picture is not good. We are just hoping that, especially for import-dependent economies within the African continent like ours, where we massively depend on importation of finished product, we will want this conflict to curtail as much as possible. If that is not done, I think it's going to disrupt a lot within our space here.
If you just tuned in, this is Business Focus here on TV3. We are live on Facebook. Please do also drop your comments, and we'll read them out for you. But I also have in studio Dr. Ofori. How do you feel hearing this analysis on how things could pan out with the war? Are you nervous?
Not that nervous, but I'm positive. I see this crisis as also an opportunity for others to come up with innovative ways how we can navigate that. We've demonstrated that as Bidex in Ghana, when the Russian-Ukraine war happened, we demonstrated our ability to keep the Ghanaian economy going, and then we're able to take certain fundamental decisions to lock in products that, whereas countries like Paris and cities like Paris and Lagos and some part of London need products, that whereas countries like Paris and cities like Paris and Lagos and some part of London even experience fuel shortage scheduling.
So from where you sit, we have enough stock. There's no cause for concern.
Well, for now, I would say we have enough stock in country that there shouldn't be any form of concern. But any country is preparing. We've got some of our colleagues in the eastern part of Africa and others finding out what has been the overall plan for us to somehow have some element of mutual sharing. They're trying to find out what are the supply sources that you are coming from that are going to affect it. We've also had contact with some of the key suppliers who are telling us that our market that is hugely driven by the IOTC financing and then long credit period will stand a risk somehow in a long term, because now you check suppliers from Brazil and Turkey are paying cash rather than some of us who will be going and then seeking for long-term payment terms agreement. And then you also need to juxtapose that with what has been the pattern in the last quarter and what has been the behavior in terms of landing products in Ghana, which we've raised series of concern. So if I'm a BP, I'm a Glencore, or I'm a Vitor, coming to Ghana and then having a contract somewhere that I know there is certainty, that when I go there, I don't experience any form of delays. They will take where they will be at peace with themselves. And don't forget that the moment these crises are going on, logistics, that the vessel owners and others will now also increase their fleet charges. And if there are business booming somewhere, why would I come to Accra and wait 30 days? Why would I come to Tema and wait 30, sometimes 47 days to only discharge, let's say, 40,000 KT? So these are serious concerns that, as a country, we all need to look at. And then we're looking out for opportunity to share some information about as to how we can use this opportunity to clean up the system and enhance efficiency and operational effectiveness within the sector.
All right. So the next question for me, I'll come back to you shortly on that, is what role can government play in the midst of all of this? You raised financing concern and the likes. I'll come to you shortly. But just to respond to something you said earlier about the fact that we have enough supply, the CEO of the National Petroleum Authority, NPA Edudzi Tamaklo, was here at TB3 a while earlier, and he actually said that we have enough, and he also added that the impact of the conflict on prices at the pumps will be marginal. So take a listen to him, and then maybe I'll pick your thoughts on that quickly. So we'll get that for you shortly. But we also have on Zoom Duncan Amwa, the Executive Secretary of the Chamber of Petroleum Consumers. Duncan, I'm sure at least you're happy to hear from Seaboard that there's not much concern. We have enough supply, and things should be marginal. But Duncan, before you comment, maybe you'd want to listen to Edudzi Tamaklo, CEO of NPA, on where we are right now as a country.
We are confident that with the stock we have currently, we'll be able to mitigate the impact of what people are expecting to be higher prices at the pump. You see, there are two key components: the FOB pricing and the exchange rate. Thankfully, there had been relative stability and firmness from policymakers in keeping the stability of the cedi in check. With that expectation, I'm confident that the expectation that prices will go up will not get there. What I see is that we'll never get to the like January 2025, December 2024 prices of petroleum product. We won't get there.
On what we have, the stock we have available, that's coming under some question. I don't know what the numbers are. What's the assurance in the confidence that could?
We currently have in excess of 200 million liters, almost 240 million liters of diesel, over 150 million liters of petrol. So together, over 400 million liters of those white products in the country. But the question is, have our ports been shut to fuel coming in? Definitely not. We are putting in place all the mechanisms to ensure continuous, flow of products into the country. That's what I can say.
So that was the CEO of NPA, Edudzi Tamaklo, there reassuring us that there's enough supply in the country, and also the fact that the impact on prices at the pumps will be marginal, and at worst, it will not get to pre-2025 prices in January, where it was selling for about 15 cedis to the dollar. I don't know what you make of this. Do you agree with this assertion?
Well, the prices could have even gone down further if we had efficient liquor management system. Currently, you check, I'll give you a range. The cost per ton for products landing at Ghana ranges between $8 to $15 on demurrage alone. So it means that if we were flowing the Lacan schedule without the erratic, unplanned Lacan mismanagement, the prices that he's talking about with the CD remaining relatively stable, definitely prices would have even gone down further. And this is why some of us felt that we need an efficient mooring facility. It will take a long time to come in, but the ones that we can control, planning and rewarding compliance within the sector, because it's not a sector that you can just leave it out to anybody to come in and disrupt the market and go. We are all aware about the disruption that currently Dangote has created within the Nigerian for other suppliers. They would want to use your doorsteps because they see an opportunity to come and dump the product here. And more so, when you have officialdom aiding such illicit practice to allow them to berth and discharge, it gives them the impetus for you to disrupt the already established one that kept the country going when the Russia and Ukraine was there, especially with the BPs and the Glencors. And that is where, and the Vitors, that is where they demonstrated commitment to the country. And because of that, the private sector also made concession that, well, we all don't know the certainty of what is ahead of us. And we liaise with MPA then for them to create the special SIOTC license to let the BPs and the big guys keep the product in tank so that we can leverage on that. That you need to commend those who made those sacrifices and who kept our market going. There is also a fundamental issue about financing of those products. Currently, as I speak, 80% of our market is not financed by our banking sector. It's financed by the IOTCs.
Okay.
So if they somehow, well, you say they are making their business, but they are also providing you something that your financial sector is unable to do, basically arising out from the deterioration of the city that ensure that not a single bank could actually finance a whole parcel of petroleum product that is worth more than, let's say, $80 million.
Okay. So the inefficiencies
that ensure that not a single bank could actually finance that is worth more than, let's say, $80 million.
Okay. So the inefficiencies with the process of getting the fuel into the country too must be addressed because that's contributing to the cost.
That is contributing to the cost. So it's not just about the exchange rate and then also the international prices alone.
All right.
Because some of the can scheduling and then rewarding those who are not willing to play by the rule book to create all these market uncertainty. And it's unfortunate that the consumer is the one paying for it.
Sadly.
There are part of it that maybe you would want to take because of the competition in the market. But eventually, when there are product shortage, so you normally will realize that there are points that they will tell you, oh, AGO supply in country is low. Because if the Lacans were allowed to be run smoothly without those disruptions, you will not have a particular product running below certain level.
Okay.
And in that case, those who have access to those products cannot take advantage of the market based on the normal demand and supply.
All right.
But here is the case that we create some of these situations and we allow the inefficiencies to be passed on to the consumers. And those are issues that I think...
I'm sure the Energy Ministry and the Finance Ministry are watching, so hopefully they will convene a meeting and find a way to address this quickly. But then we have Duncan Amwa also joining us. Duncan, thank you so much for your time. So your quick thoughts on the NPA comments. We have enough supply, impact to be marginal. At worst, things won't go as bad as we were buying for late last year. Do you agree with these assertions?
Michael, let me put in this. What you're seeing now in country, it's simply private capital at play. And I'm happy that you have Dr. Ofori in your studio. The private sector or the BDECs clearly are holding us down. And if I got the numbers that were put out there correctly, some 200 million liters and another 100 and something million liters. If that was all you had, I'm afraid to say that that would definitely not be enough to even last a month. But once you have the BDC still London products, as of today, you have every assurance that we would have products anyhow, any way you look at it, and we shouldn't be in any difficulty. The only challenge, again, if I heard Dr. Ofori say, is that I'm privy to some information within the industry that indicates that you have a laycan, is it a mismanagement or a laycan challenge where people bring cargo that should have discharged. Then other cargoes rather come, suddenly, and they are rather given a priority discharge. At a time like this, when there's global uncertainty of even getting to land cargo, I do not think that we should continue with this business as usual thing where people are just trying to show off who they want to discharge and then who they are creating demurrage for. Look, I have a tall list in front of me that indicates that some OMCs are paying as much as 7.5 million Ghana cedis just for demurrage. Some BDCs, sorry. Again, if you are doing between $8 to $15 per metric ton on demurrage, it tells you that prices could have been a little easier downwards. But certain factors like how we are arranging or managing this laycan thing is clearly going to lead us into a ditch if nothing is done about it. That said, of the security that we are looking for today, there is not a single liter that you can account for from the state, petroleum assets. I talk of Tema Oil Refinery, I talk of Bost. And so it looks as though it is the private capital that is still sustaining us. I do think that whatever support that they need at this point, we should be able to advance to them. Secondly, do not leave the state petroleum assets also to idle around this time. Whatever we need to do to be able to invest in Tema Oil Refinery, to bring them to a point where they can at least contribute 40–50% of our net national consumption or need. We should be able to do that for them. I have heard the management of Tor indicate that by October they will want to come back on stream. They will want to be able to turn on the plant and be able to process fuel and help all of us. You are approaching a crisis point globally where if you are not lucky, where if you don't get your planning correctly, if Iran should disrupt the Strait of Hormuz, as they are clearly indicating this evening, per some attacks on Doha, some attacks across the Middle East, if they should proceed and disrupt, like Dr. Yusuf was saying, the Strait of Hormuz, over 22–25% of global cargo would no longer be able to get to the market. Again, those who will reroute to other places, they will charge you way more. And so premiums would go up, insurance would go up, your freight would simply go up. And that will mean that from a report I just cited about an hour ago, Goldman Sachs is already projecting $110 a barrel. If that should happen, and we do not have any plan in place whatsoever, we do not have a single liter with Bost whatsoever, we do not have the refinery working. Michael, I do foresee a situation possibly arising where fuel prices would simply be galloping. We've seen this before. If you recall the Iraqi invasion, right, after the 9/11, and all the things that you and I could remember did happen. Around President Kufuor's time, crude went to as far as $147 a barrel. The situation in the Middle East today is looking even more dire than, as it were, the fight against terrorism at the time, where we were simply bombing, our way around.
Okay.
The big brother next door, which is America, that should have called a truce, has clearly taken sides. And so it leaves all of us in a messier situation. And I think at this point, sober heads must prevail. Proper and thorough planning must be done. Whatever cargoes that we can assess today, we should assess them and stop this picky cherry thing where an 18,000, metric ton cargo comes 19th. Then by 23rd, it is discharging. Somebody has been here with 40,000, ton cargo for the past 2 weeks. It is still there waiting and attracting demurrage. All of this will add up to fuel prices. And I don't think we should continue to entertain that attitude where things are just done anyhow. We are approaching a crisis.
And at least clearly you agree with
resolve.
You agree with the CEO of Seaboard on that issue, that the efficiency with discharging the products must be looked at critically to reduce the cost of bringing products into the country. But if you just tuned in, this is Business Focus here on TV3. Now, every day people face different emergencies: police emergencies, fire emergency, medical emergency, you name it. But many Ghanaians don't know the emergency numbers. Well, here's one you would want to remember: a *770#. Yes, *770# is the new EcoBank money emergency number. *770# gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more even without data. So there's no need to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial *770# now for solutions to your money emergencies. EcoBank, the Pan-African Bank and proud sponsors of Business Focus as well as Telecel. My name is Michael Obodu. We'll go for a quick break. When we come back, we'll bring you more. Please stay tuned. Welcome back to Business Focus, and those were tidbits from EcoBank on how to plan for your retirement. Well, we were on the streets earlier today to pick the thoughts of Ghanaians on this whole Israel-Iran conflict and what their concerns are really with it and how they think it will affect fuel prices. Let's watch it.
The way things are, there is a reduction in prices of goods and services. So if fuel prices increases, definitely everything will increase back, and the economy is very hard. So we are managing, and I'm hoping that the war will end very soon so that everything will go back to normal.
The war actually is not a good thing. And from the look of things, we've been exporting things from those countries. So the war is somehow affecting the economy. If those countries are fighting, it means our fuel that we've been exporting from them will also increase in price because they will not give us access to it again. So it's something that will affect not only the country, but we, the citizens.
We have been hearing this since, that as they are fighting, things will increase, but still, things are the way they are. I don't think that it will affect anything like the way the Russian-Ukraine war did.
So those were some Ghanaians expressing their concerns there. Really, the issue is how will this affect fuel prices? And that's the worry on the minds of a lot of Ghanaians. But we also have joining us economist Professor Peter Quartey. Prof, thank you so much for your time. Now, how is this development going to affect our economy? And do you think we have our reserves as a country, which we've seen bolstered over the last couple of months, can it cushion us from this whole conflict conversation?
Economy has been vulnerable to external shocks. I mean, crude oil price, commodity price shocks, and many other shocks. If you look at our oil, for instance, I don't think we store much. We don't have a lot of storage capacity. We don't have a lot of reserves in terms of oil storage, etc. So anything that happens to the oil market immediately translates into higher prices. So for what is happening now, you can see on the global market that oil prices have started going up, inching up into the $80 per barrel. And that would have significant effects on prices at the pump. I won't be surprised if at the next pricing window, we'll see an upward adjustment. So most of the gains that we have made because of the appreciation in the CD and the drop in global prices will be eroded. But the reserves we have can absorb the shocks up to a point, but it cannot do that forever. So we need to also stockpile some oil reserves going forward. Otherwise, we may have to face higher prices in the future. But as I said, this is early days yet. If the shocks or what is happening continues for a longer period, then we are likely to suffer some long-term.
Okay. All right, Doc. So we know earlier government had announced that the CD will stay between the 10 to 12 CD range. Now, looking at what's happening, do you see a likelihood of government revising that target maybe lower to about 8 to 10 CDs? Maybe that would also help absorb some of the shocks that we are expecting from all of this. And finally, on the issue of how this will affect our efforts at taming inflation, we've seen some decline over the period. Do you see that continuing, or will things go south?
Greater part of this year, no, I don't see a revision in that. I think it's still early days, yes. Although we see on the interbank market, it's still within that range. But if you look at the forex market, we have seen the dollar already above the 12 CD range. So it's still early days, yes. But I don't foresee us moving into a higher bracket now. Perhaps from September, we might, when Christmas purchases and also foreign companies start to think and prepare to repatriate profits towards the end of the year, that is when we see some pressure on the forex. But for now, between now and September, I don't see the need for any revision. Energy or fuel accounts for some percentage. I mean, when we look at the inflation, its effect in inflation. So it might not be very high, and therefore we may see a continuous decline or marginal decline, or perhaps the rates might move around the current rate. But
all right. So, Prof, if we understood you, inflation will stay probably around where it is. You don't see a significant impact. At least that sounds promising to hear, because there are concerns that this may have some very dire consequences on our economy and the macroeconomic stability that we've attained so far. So that was Professor Peter Quartey, an economist and the director of the Institute of Statistical, Social and Economic Research, ISE. We'll go for a quick break. When we come back, we'll bring you more. Please stay tuned. Welcome back. This is Business Focus here on TV3. We've been discussing the impact of the Israel-Iran war and the likely closure of the Strait of Hormuz, depending on how you pronounce So, Doc, finally, we'll for 30 seconds, quickly.
Yeah, so I think we need to look inwards. Okay. We need to develop our infrastructure base. Yeah. Duncan mentioned refineries is very important. Storage capability is very important. Gas plants. These are the things that will cushion us. So I am very pleased about government strategy of the big push. You've heard about the big push.
Yeah.
Where ABFA, 100% of it is going through infrastructure. Okay. I think this is an excellent.
And the gas plants that I know you are also championing.
If you do them, I think these are things that will cushion us against some of these excellent.
Alaji, Doctor, thank you so much. Doc, I'm sure for you, the most important thing is getting the efficiency right?
I think I don't see whatever is happening there as difficulty.
Okay.
But we should rather leverage on that to smoothen the issues that we have direct control over.
Okay.
That we do that inward soul session and bring some level of efficiency.
All right.
And then also tax the SOEs in charge of the state assets to be prudent with the little resources.
Doc, it looks like we have to plan and bring you back and then exhaust this conversation properly. But gentlemen, thank you so much for your time. That was Dr. Patrick Ofoe, CEO of Seaboard Chamber of Bulk Oil Distributors. Alhaji Dr. Yusuf Sulemana, energy analyst. Also joining us via Zoom was Dr. Duncan Amo, Executive Secretary of COPEC. Also, we had economist Professor Peter Korte. Thank you so much for your time. That will be all for today's edition of Business Focus here on TV3. For more business stories, our website 3news.com is there for you. I am Michael Obodu. Thank you for watching. As always, please stay safe. Catch you same time next week.
Business Focus is brought to you by EcoBank.